Welcome to the Deep Dive, where we crack open the latest earnings calls to uncover the crucial insights. Today, we're plunging into Bunge Global's second quarter earnings. We're going beyond the raw numbers to explore their strategic moves, monumental mergers, and what it all means.
That's right. This isn't just, a quarterly report. It's a window into how a company navigates an incredibly complex global environment. Bunge faced a challenging period head-on, delivered better than expected results, and their ambitious vision for the combined Bunge Viterra entity could truly reshape the global agricultural landscape. We'll unpack all of that.
Okay, let's start with the immediate headlines that certainly got the market's attention. Bunge reported adjusted earnings per share of $1.31. Now, adjusted EPS, it strips out those one-off items, right? Gives a clearer operational picture.
Exactly. And that $1.31 figure significantly beat Wall Street's consensus estimate of $1.14. That's a strong 15% beat.
15%? Wow.
And on the revenue side, they pulled in $12.77 billion, also surpassing expectations by about 12.5%. Now, total revenue was down 3.5% year over year from $13.24 billion. But that strong beat on both lines signals, effective management in a dynamic market. Their agribusiness segment, their core, saw sales of $9.17 billion. Down 5.1% year over year, but they did see some encouraging improvements in soy crush later in the quarter.
So it's clear Bunge successfully navigated what their CEO, Greg Heckman, called a highly complex period, delivered results that definitely pleased investors. It speaks to a certain agility, doesn't it?
Absolutely. This beat isn't just luck. It points to Bunge's aggressive approach to risk management, especially in volatile commodity markets. Their hedging strategies, for example, seem to have been particularly agile, allowed them to profit where maybe others struggled.
Right. Okay, those headline numbers are encouraging, but the real story is often in the details. Let's dig into some of the more pivotal financials. The reported GAAP earnings per share, for instance, came in at $2.61. GAAP, that's the standard accounting, right?
Right. Generally accepted accounting principles. And yeah, $2.61 is a significant jump from just $0.48 in the prior year. A huge leap.
So what drove that massive increase?
Well, it wasn't just operational performance. It included a favorable mark-to-market timing difference of $0.69 per share.
Mark-to-market. That's valuing assets at current prices.
Basically, yes, even if not sold. So the value of some financial instruments or inventory increased on paper due to market shifts. Plus, there was a net favorable impact of 61 cents per share from other notable items, primarily an $1.87 gain from selling their U.S. corn milling business.
Ah, the divestment. We'll come back to that. Beyond earnings, what about cash flow? That's often a true measure of health.
It absolutely is. Their trailing 12-month discretionary free cash flow stood at approximately $1.1 billion. That yields a robust 9.8% cash flow yield. Discretionary free cash flow, that's the cash left after paying for operations and capital spending.
So what's available for shareholders or new investments?
Exactly. And a 9.8% yield is pretty strong. It gives them plenty of financial fuel, flexibility, helps manage working capital swings, and pursue those strategic initiatives. Shows cost discipline, too.
Now, zooming out from the financials, the truly transformative news came just after the quarter ended, completing the $34 billion Viterra merger on July 2nd. This is a game changer for Bunge, vastly expanding their origination reach, sourcing crops, and their global port capacity.
Huge.
And it happened right alongside that divestiture of the U.S. corn milling business. What's the strategic thinking behind these huge simultaneous moves?
It's really about simplification and scale. Divesting corn milling streamlines the portfolio, lets them focus on core global value chains like oilseeds, increases trade flow optionality. The Viterra merger, on the other hand, is about building a truly global, diversified powerhouse. Management's been hyper-focused on identifying and capturing synergies.
Synergies, cost savings, efficiencies.
Yes, but they see them as durable synergies, benefiting the whole value chain. Things like optimizing logistics, transportation. Imagine the scale effect on shipping roads globally. It's not just about cutting fat. It's about fundamentally reshaping global trade flows for ag goods.
How are they tackling the integration? Mergers of this size can get messy.
Yeah, they emphasize leveraging existing playbooks. They talked about a refined value chain operating model, global centers of excellence to align teams and, maximize value capture. The CEO sounded confident, suggesting they can deliver more than promised, faster than promised. It seems they have a blueprint they trust.
Okay.
They believe this combination will result in higher lows in tough cycles and higher highs in better cycles.
Higher lows and higher highs. What does that really mean for Bunge and its investors in practical terms?
It means the combined company should be significantly more resilient, less volatile. In bad years, earnings won't dip as low thanks to diversification, and in beaming years, they capture more upside. It kind of smooths out the bumps inherent in commodity markets.
Right, building a more stable platform.
Exactly. A scaled, margin-resilient agribusiness platform using a global approach to risk management aligned with that combined earnings power.
That's a critical outlook. Moving to their guidance, what does Bunge expect for the rest of 2025?
Okay, so for the full year 2025, Bunge reaffirmed their adjusted EPS guide of approximately $7.75. But, and this is crucial, that's for the legacy standalone company. Meaning it specifically excludes second-half earnings from that divested corn milling business, and significantly, it does not yet include the impact of the Viterra merger.
That's fascinating. So an updated outlook with Viterra is coming before Q3 results.
That's what they promised, yes.
That feels like a pretty significant near-term catalyst for investors. What exactly will that updated outlook tell us?
It should quantify synergy run rates, the ongoing annual savings and revenue boosts from integration, and the integration costs. It'll give a much clearer picture of the combined entity's real earnings power.
Definitely something to watch. What about their segment-specific outlooks for now?
They expect full-year agribusiness results to be higher than their previous outlook, mainly driven by processing. Still down from last year's exceptional performance, though. However, fine and specialty oils results are projected to be down. That's due to a softer Q2 and ongoing uncertainty in U.S. biofuel policy. Q2 volumes there were actually down everywhere year over year.
Can you elaborate just a bit on that uncertainty in U.S. biofuel policy? What's the specific issue?
Well, there's still some lack of full clarity on certain regulations, the long-term paths for policies like the renewable fuel standard, how carbon intensity scores will fully play out. That policy environment directly impacts demand for the feedstocks Bunge produces, like soybean oil.
Got it.
They also expect interest expense at the lower end of their $250 million range, and capital spending between $1.5 and $1.7 billion this year, including those big new projects.
Okay. Now, the market's immediate reaction was very positive. Stock gained, 2.75% pre-market, closed up over 5%?
5.19%, $80.36, yeah. And volume surged to 4 million shares, more than double the average.
And you mentioned unusual call option activity was flagged, too. What does that signal?
Well, taken together, it reflects pretty bullish sentiment. Investors seem to be rewarding management for navigating the tough conditions and executing these huge strategic moves. There was talk of rotation into grain merchants after crush margins rebounded, which analysts like CFRA's Arun Sundaram noted, suggests a belief Bunge is well-positioned.
And the call options.
Right. A call option gives the right to buy stock at a set price later. A surge often signals traders are betting on significant upside, reinforces that positive feeling, aligns with the transformation narrative.
Makes sense. Beyond the numbers, management gave some crucial insights into macro trends, especially soy oil demand driven by biofuel policies.
Yeah.
You mentioned the U.S., but also Brazil.
Yes, the B15 mandate 15% biodiesel blend is expected in Brazil, and the U.S. 45Z policy aims to incentivize domestic production, including soybean oil. They also confirmed 45Z covers all North American feedstocks, so that helps their Canadian canola crush too.
So what's the interplay between this rising domestic biofuel demand and, the complex global trade flows we always talk about?
That's the key question, isn't it? How does Bunge's expanded footprint help them navigate or even benefit from those shifts?
Yeah.
Well, take 45Z. The removal of the indirect land use charge concern is significant. It basically puts soybean and canola oil on a much more competitive footing against other feedstocks for biofuels. Bunge, with its huge crush capacity, is positioned to capture that value shift. They expect refining margins might moderate eventually, but some value should shift back into crush margins.
Interesting. But they also acknowledge challenges persist, right? Global crop glut, margin compression.
They did. Challenging conditions are expected to persist, was the phrase, I think. But they see their expanded, balanced global footprint as the key advantage. It lets them navigate those dynamics and capitalize on opportunities, like China importing soybean meal from Argentina while exporting soybean oil to India.
How does Bunge facilitate that?
They see those flows as logical for China's food security focus. Bunge's network lets them efficiently manage these shifts. Their South American assets feed China's meal demand, while their global network allows arbitrage, maybe moving U.S. or South American oil to India. That flexibility is vital with tariffs and shifting lanes.
It's clear they're not just reacting, they're investing heavily in shaping their future. What specific capital projects did they highlight?
Several key ones. The Morristown plant is on track for commissioning mid-Q4, full operation early to mid next year. The Destorhand crush project with Chevron should come online late Q2 next year, then a barge unloading project.
And the focus of these projects?
Largely higher protein meal and renewable diesel feedstocks. Directly aligns with those biofuel mandates and boosting meal export capabilities. It's about capturing value from that sustainable fuel demand growth.
So long-term investments, positioning them for growth regardless of volatility, aiming for higher ROIC using tech like data analytics.
Right, and they highlighted the network is now much more balanced between crush capacity and origination. Better vertical integration from the farmer right through. It really does sound like a strategic plan coming together.
Okay, this deep dive has given us a lot to chew on. And as we like to do, let's put on our speculative hats for our This Is Not Financial Advice segment. If we were looking for an, let's say, outrageous but plausible trade based on today's discussion, what might that look like?
Okay. Well, given this strategic pivot, the strong results, that market reaction, here's a thought. Consider a long position in Bunge out-of-the-money call options, specifically targeting a strike price maybe a few months out, expiring after that updated guidance with Viterra is expected, but before the full Q3 release.
Out-of-the-money calls. Okay, walk us through the logic there. Why that specific strategy?
Well, the argument rests on a few pillars. 1, Bunge just delivered a strong beat, showing resilience. 2, they completed a truly massive transformative merger. 3, they have a clear near-term catalyst coming. That updated guidance, including Viterra. Management sounded very upbeat, hyper-focused on synergies, confident in seamless collaboration already.
So the outrageous part is betting the market is underestimating those synergies.
Precisely. Betting on a significant upside surprise when Viterra's contribution and those synergies are finally quantified. That could lead to a material re-rating of the stock. Combine that potential synergy surprise with the ongoing tailwinds from biofuel policy getting clearer in Brazil and the U.S., the stock could see another leg up.
And the unusual call activity suggests maybe others are thinking along similar lines.
It suggests the idea isn't completely out of left field, yeah. The trade aims to capture potentially outsized returns if Bunge really knocks it out of the park with the synergy numbers, leveraging the optionality. Of course, it's highly speculative. Out-of-the-money calls carry significant risk. If the synergies disappoint or the market shrugs, those options could expire worthless. Big risk, potential big reward.
Got it. A speculative play on underappreciated merger value. So to recap, Bunge delivered a robust Q2, completed the huge Viterra merger, and is now deep in integration mode, aiming to unlock major synergies while navigating a complex global ag landscape.
Exactly. They're positioning themselves as a more diversified, resilient platform, ready to capitalize on global demand for food, feed, and fuel. Stronger finances, clear path to cash flow.
What stands out to you most, thinking longer term? How fundamentally might this Bunge-Viterra combination change the structure of global agribusiness, especially with these trade and biofuel shifts? Are we seeing a new kind of giant emerge? Something to consider.
Definitely food for thought. And as always, remember the information discussed today is purely for informational purposes. It is not financial advice. Investing involves risks. Please do your own due diligence.
Absolutely. We encourage you to keep exploring these fascinating topics. Thank you for joining us on the Deep Dive, your shortcut to being well informed. We'll catch you on the next Deep Dive.